President Trump is now promising a new 50% tariff on China on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%.
Remember there were 34% tariffs on all U.S. goods coming into China. That's now been increased to 84%.
That includes a 104% tariff on China, which, by the way, has responded this morning by hiking their tariffs on U.S. goods to 84%. That is up from the previous 34%.
Let's return to our breaking news now, where China has announced 84% tariffs on American goods coming into China.
A catastrophic blow to the U.S. economy. Over $500 billion in American trade value has vanished as former President Donald Trump's aggressive tariff war with China appears to have backfired spectacularly. In a shocking twist, China is now leading a global boycott of American-made goods, and the economic ripple effect is being felt from Wall Street to Main Street. Subscribe to our channel for more urgent updates on this unfolding story. Just a few years ago, the Trump administration promised to protect American industries by slapping billions in tariffs on Chinese imports. The goal? Bring jobs back to the U.S., punish China for unfair trade practices, and restore economic dominance. But now, in a dramatic reversal, the very strategy that aimed to make America great again has resulted in a stunning $500 billion collapse in U.S. trade assets, according to new reports from global trade analysts. Here's the twist. Instead of buckling under pressure, China retaliated with a long-term plan, quietly forging powerful trade alliances across Asia, Europe, and Africa while encouraging domestic consumers and partners worldwide to reject American products. The result? A coordinated, informal global boycott of U.S. goods that has left American manufacturers reeling. Once vibrant U.S. export industries like agriculture, tech, and auto have seen orders vanish overnight. Shockingly, even U.S. allies like Germany, Brazil, and South Korea are cutting back on American imports in favor of Chinese alternatives. This is not just economic warfare, it's a geopolitical earthquake. In a secret 2024 trade summit in Shanghai, Chinese officials reportedly pushed for a non-dollar trade bloc, encouraging over 40 nations to settle transactions in yuan, the Chinese currency. And guess what? It's working. The U.S. dollar's dominance in international trade is eroding faster than ever before. According to the World Trade Index, the dollar's share in global transactions has dropped to 45%, the lowest in decades, with the Chinese yuan now accounting for over 31%, an unprecedented surge. Analysts are calling this a reverse trade war, where the boomerang of American tariffs has returned with global force. According to a leaked internal memo from the U.S. Chamber of Commerce, major American brands like Caterpillar, Intel, and Ford have lost billions in overseas revenue, forcing layoffs, factory shutdowns, and massive stock slumps. In fact, Ford's exports to Asia alone are down by a jaw-dropping 67% in just 8 months. But here's the real kicker. China is now influencing consumer sentiment worldwide. Social media campaigns such as #Boycott USA and #BuyChinaFirst have gone viral in over 20 countries. In India, the Philippines, Kenya, and even parts of Europe, consumers are proudly rejecting American brands, not because of product quality, but as a political statement. This is economic nationalism, and it's spreading like wildfire. And while Washington remains locked in partisan gridlock, Beijing is stepping up. China just announced a $2 trillion trade and infrastructure deal called the Global Harmony Initiative, aimed at building deeper ties with emerging markets and offering them cheap Chinese goods, tech, and infrastructure in exchange for loyalty. It's a direct challenge to U.S. influence, and for now, China is winning. Many economists warn that this is just the beginning of a much deeper economic storm. The U.S. manufacturing sector, already weakened by rising costs and broken supply chains, is now collapsing under the weight of lost global demand. The American Farm Bureau reports that soy exports to China have fallen by 92%, bankrupting thousands of family farms in the Midwest. And high-tech industries, once hailed as America's future, are now struggling as Chinese and Asian consumers boycott everything from smartphones to microchips. Meanwhile, China's tech industry is booming. Huawei, long blacklisted in the U.S., has captured record market share in Southeast Asia. And don't forget to subscribe to our channel.